We're talking commodities now, and Okpeyemi Oguntade, a senior economic research analyst with financial derivatives, joins me to take a look at some of the burning issues. Good morning to you, Okpeyemi.
Good morning, Harriet.
It's great to have you on the program, and I think it's the first for the year. So many issues, of course, we're talking about and focusing on one of the burning issues as highlighted in today's report from financial derivatives company. The central bank's plan to reduce weekly forex sales by 25% to $6 million. Talk to us about the immediate impact of this particular information.
Well, we know in the forex market right now, what we're having is issues with supply. And if the major supplier in that market, that being the central bank, is planning to reduce by 25%, I think we can all understand that we'll probably see rates depreciating further. But that aside, you know, the central bank has decided to meet with the retail sellers tomorrow, and you know, they're trying to discuss how they could adjust rates in such a way that the spread between the official market and the parallel market isn't so large. By the end of the day, it all boils down to supply. I mean, we've seen what the central bank has tried to do in terms of trying to stabilize rates around 305, and we've seen that over the past, between June and December last year, we saw that, you know, the spread kind of increased by about 40%. So, I mean, at the end of the day, it all boils down to supply. If you're not going to be able to increase the supply to the market, then you probably really can't expect an appreciation in that market. And the market is already highly fragmented. We need to ensure that the rates are all converging towards a particular point, as opposed to having various rates, because that gives opportunities for arbitrage, and that's not what we want in this
But then
market.
You see a lot of people will argue with you that that's not particularly easy, because everybody's in it for business, and like you rightly pointed out, a supply issue is the primary concern for the central bank. The central bank has continued to draw down on much needed external reserves that the country does not have, just to make sure that there's liquidity in that segment of the market.
Well, yes, and in recent times, we've actually seen an accretion in reserves. I think we're currently about 26 billion, 0.22. And this is largely because we've seen that, you know, oil prices have recovered somewhat, although between, as at yesterday, they came down to about $54. But we saw that prices increased after the OPEC deal. We also saw that there was some accretion to the reserves from the AFDB loan, the first tranche of the AFDB loan. But at the end of the day, if we're looking at it's an alignment of policies between the CBN and the fiscal authorities. Now, we've seen that, you know, the Niger Delta militants have, you know, they've come out to say, you know what, we're not doing any negotiations anymore. We're going to position our fighters in place to, you know, to take on more attacks, even though we've seen there's been some form of stability to oil production. So for the external reserves, if we're gonna have more accretion to the reserves, then we have to ensure that the government gets in some form of dialogue and try to appease to the wants of the Niger Delta militants, because at this point in time, we really don't have room to, you know, to have any shortfall in production. Because if the central bank is going to meet with the BDCs and they want to agree on a rate and they want to ensure stability in the market to attract investors, then the fiscal authorities also have to play their own part in ensuring that the money that is coming into, or the opportunity for us to get more reserves, is also, you know, taken care of, that being the Niger Delta militants.
But then you see the issues on the table, there are a plethora of them, and so sorting them out is very important at this time.
Yeah.
But for the manufacturers, this seems to be good news, especially for those who depend on FX to import some of their raw materials that they use in production. So for the likes of, let's talk about some of the FMCG companies like Nestle, for instance, Honeywell, Flour Mill, Cadbury, and Nigerian breweries.
Yes, okay, so going back to alignment of policies again, we've seen in recent times that fiscal authorities, as well as trade policies, we've seen that there's been an adjustment to tariff rates for some certain products that are imported to produce. And we've also seen that they've adopted this zero tariff rate for some certain machineries that are used to produce some agricultural products. Now, coming back to the monetary authorities, now the monetary authorities also have their own role to play to support productivity. Exchange rate, for one, is it's particularly important, because at the end of the day, you have to import these things, and, you know, with a weaker naira, it's just going to make cost of production increase, even though you're having, you know, it's kind of counterproductive if the tariff rates are coming down, but yet the rate at which you're importing them is going through
Which also
roof.
means consumer goods are also going to be on the rise, most likely.
Yes, if that happens, because, I mean, in recent times, what have you seen? I mean, if you look at Indomie, if you look at Gala, if you look at a couple of other consumer goods, we've seen that prices have increased, and this all boils down to the foreign exchange saga. So at the end of the day, I think the CBN, I hope that the meeting with the BDCs tomorrow is very successful and they're able to agree on a rate that is more affordable to the manufacturers.
But what about the domestic commodities that do not, rely on FX, for instance, talking about the usual ones we track here on the program,
Yes.
and then, coming in from the festive season, of course, it was expected that those prices would increase, but that's changed a little bit. Tell us how much.
Well, looking at the domestic commodities, rice and beans for one, we've seen that prices have come down by about 20% against the backdrop of, the festive fever is over. And we've seen, a significant drop. Rice is now about 19,000 and beans as well has also reduced to about 18,500. But looking at the other commodities that are import dependent, even though we have, or that are not import dependent, we have the substitution effect, right? So if we're seeing the prices of some certain commodities remaining high, then it's only fair that these farmers will most likely try to keep their prices high in order to, cover their cost of living, because at the end of the day, they're purchasing these other commodities that are priced, that are more expensive for them to purchase.
So then, of course, at this time, we still see that one of the most important components in building, cement, still stays unchanged at 2,300 naira, even though it seemed as if it increased from 1,900 thereabouts.
Yeah, as at last year was about 1.7. So
Okay.
I mean that's still a huge jump between 1.7 and 2.3. Even though it's flat for now. But looking at, the expectations of increased construction works coming from the government, we'll probably see cement prices increasing very soon. And also looking at the fact that some of these things that are used to produce cement are also imported. And looking at the exchange rate at this point, it's not looking too good. We're hoping that it to get better. Looking at the Eurobond markets, we've seen that as at yesterday it gained about $2, and we saw yields coming down. So which shows that investors are actually interested, or they're anticipating a recovery in Nigeria. So maybe this might just be the time where they'll take positions, and hopefully would have that dollar inflows that we need to experience stability in the foreign exchange market.
All right, so we've got the CBN meeting and the meeting between the CBN and the Bureau de Change coming up tomorrow. So that gives us very fertile ground to have our next conversation on Thursday.
Yes, it
Opeyemi,
does.
thank you so much
Thank
for
you for
coming in
having
this
me.
morning and, of course, sharing your perspectives with us.